Ajay Shrivastava, there's an old market line which says that when traders have nothing to buy, they start selling. I guess right now they have nothing to buy and they're simply selling because they're feeling the pain of either they're feeling the pain of either M2M or they want to conserve cash. Ajay, good morning. Is my voice reaching you?
Good morning, Neeraj. Yeah, I can hear you. I can hear you well. Thank you.
Well, good to hear the power in your voice, Ajay. So clearly means that you are not getting hit by the market price and the gloom and doom which is there in the market. So I like the optimism in your voice.
No, we all get hit, we all are basically, essentially we are net long, so we all get hit. But I think what is holding us a little bit above water is the fact that focus on the large caps has meant a good story in the end for all the investors who are in this game, because it's really the big brunt has been faced by the mid cap and the small caps. And if your portfolios are basically focused on that part of the market, I think that's where the problem is coming, both in terms of buying and no fresh liquidity commitments in the HNI sector to the mid cap market. I think by and large, if you're in the large cap, you're okay. You haven't done badly at this point of time.
In this entire year, Indian markets have underperformed the global market fall. We've fallen much more than what other emerging markets have done, and especially what US markets have done. Do you think we are likely to lead this leg of market decline, or we could outperform in this fall simply because we've fallen ahead of what others have fallen?
Well, I'll be honest to you. As much as I feel patriotic and say this market is going to be ahead of the World Cup, I don't think it's going to happen. And I think the three principal reasons. One is that the way we have reacted to the banking crisis. I think the head in the sand approach is not going to pan out in the end. There will be a frightful spill-off of this whole thing which is coming out of the nationalized banks. There are lots of rumors floating about private bank leadership issues and their connections with some of the companies which have to be quelled at this point of time. We need leadership change at some of the key private banks, which is not happening. So, the way the whole banking crisis is coming out, I think it's going to lead to something very precipitous in our view. And I have an ominous inkling that March results could show a very, very damaging picture. And how many people can you commit to CBI at the end of the day? You need to find economic financial resolution to the problems. You can't jail the entire segment of debtors who are the borrowers who are defaulting at the end of the day. So I think why am I feeling a little pessimistic today is the way the whole banking crisis is coming around and its impact on the market. And that is what is giving us a corollary is that what is going to happen to the large caps is they are insulated by and large. They all don't borrow too much. They have access to credit limits from other parts of the system. And so they will score heavily over mid and small cap competition in the next 12 months. So in an economy which is not doing too well, you got three sectors which are clearly in doldrums, which is gems and jewelry now, leather and handicraft, and of course the last big one is real estate. You will find only very small pockets which are going to do well in the near future. And I think that's the point. This market is going to become so narrow in its ability to produce results that I don't know what's going to happen to the whole market thereafter. So not very optimistic that we will lead the charge in the global market because the domestic factors are just too compelling on the downside.
So what is Ajay Shrivastava, the investor, doing today? Is he sitting with the USL glass bottle and just chilling and watching the trading screen because there's nothing much that you can do about it? Or are you pulling your socks and already getting out there with your buying list, Ajay?
See, there it goes. There it goes. The repetition is already in smithereens on the national TV, right? No, I think that's why I said, having said that, what are we doing today? I think we are buying into consumer-facing companies. I think we're looking at any correction to buy into them at this point of time. Well, in a country which has got 2 states under prohibition, obviously you know what people like us are looked down upon as, right? Okay. So, okay. And anyway, jokes apart, I think We have seen a steep correction in one of the stocks, USL for instance, and is going to subdivide. So I think we should be buying there. We have seen United Breweries has been a strong player, consistent. You can buy there and keep it. There are lots of now consumer-facing, non-alcoholic companies at this point of time, which are reasonable buys at this point of time. You can live with them and safely buy. Issue is not what we are buying. Issue is what's our commitment and what's our extent of commitment in the market. That's weak at this point in time. You know, we buy at the periphery, balanced portfolios and so on. But are you saying there is a quantum shift in our thinking that, listen, this is a bargain hunting time, should we buy? No, we are not buying that problem. And the reason being political uncertainty, banking crisis tells us we will get many more opportunities in the next 3 months to buy these stocks. So don't commit 100% today. Off and on you keep buying, you know, you don't live out of the market at this point of time. But lesson is simple. If you're not booking profits, you're missing quite a bit of fun in the market.
And Ajay, considering you're in the heart of the action in Delhi, right, and now that we've also been stationed here for the last 3 months, I guess politics is a big overhang right now, right? Because you don't know whether it's going to be a decisive, clear mandate in 2019. And that, I'm sure, is playing heavily on the market's mind.
Well, you know, yes, it is playing heavily on the market's mind. Definitely, there is, I think, ominously for the ruling party, the view is that it's not going to happen. A clear majority of any one single party is not going to happen. Having said that, we have a contrarian view. We believe that the reform process had its collateral damage, which is wide and I think not even understood fully, and that's what is playing out in the economy. Less adventurism, more realistic targets, more focus on work would get us phenomenal result. And it doesn't matter whether the ruling party changes its course in the next 6 months or if there is a new dispensation coming. I think we need to be looking at a fact that the period of dislocation is perhaps over. Now we need to focus ourselves and get our sectors, export sectors back in order, get the leather industry back in order, get the gems and jewelry back in order. We need to put the house in order, get the MSME sector moving because they are the growth path. And we need to really put a stop to this FDI concept. FDI has not come in defense for a moment. Where are the FDI coming? Our banks are now owned by foreigners at this point of time, which is not a good sign for any economy at any point of time. Our e-commerce companies are owned by foreigners, not a good sign. We need to get wealth back and business back to Indians. That's the most important point. And if the political change gets into this agenda that we need to get a job back, we need to get people back, we need to get MSMEs back to order, I think we have a great future ahead. And I think political winds of change will influence economic policy in the next 6 to 9 months. It may become populist, but so be it. But the fact is that you might find a lot of wonderful changes coming in the next couple of months if the way the political situation went out. So don't look at uncertainty, look at the opportunity this change brings to you, and if this change comes, it'll be for the better for most of the Indian market.
Oh, you know, Ajay, why am I getting a sense that you're looking at alternate careers?
I have only one career and I wish to retire with that one career and a little money in the bank.
But the definition of little is different for everyone, but we are not getting there. So let me just talk about the basic concern right now, Ajay. The basic concerns in the world are two. What will happen to the costs of capital, because banks are likely to print less money because inflation is going up, and the reason why inflation is going up because global growth is going higher. Now today markets are nervous about trade war, and the reason why they're nervous about trade war is because it could have an impact on global growth. So what is the real concern here? The sell-off which we saw in the month of Feb, which was largely backed because of global optimism, or the sell-off today which is largely caused because global trade could get disrupted?
Well, I think, India is such a minuscule part of global trade that I don't know any amount of trade war can harm it how much. It may harm a few sectors here or there, but I don't think anybody is looking at a really bad scenario for Indian exporters by and large. It's our domestic policies. If you look at it, go back to cotton textiles, we withdrew a lot of duty drawbacks and reduced the rates. That hurt the textile sector. Credit flow to gems and jewelry, it hurts it. You know the story of leather in any case. We are not getting hurt by global factors. We are so small. I don't even think we are in the radar of most companies, barring US for IT people walking into an H1B. Leave that aside. We are not in the radar of anybody. I think we need to get a whole house in order. Our problem is different. Our problem is liquidity. Our market was thriving on liquidity coming from globally, domestic liquidity. Now the fact that the global rates are going up, the ability for them to do finance into India, borrow money and put into Indian market, that goes down. The ability of the Indian investors seeing a kind of a bloodbath in the last 4 months of investment, that might get imperiled. So our concern today is not really global trade war. Our concern is there a withdrawal from equity markets by the global investors, which will less money for India, and for the domestic investors, because having sitting on such large losses of people who invested since October, if I'm not wrong, or maybe November, will they continue to commit the kind of money they committed last year? If incremental flows stop, that's what is hurting the market. Today, it's not selling. If you look at the volumes are very low in most stocks. Just analyze it, very low. It's just a sheer lack of buying interest and liquidity. So if you ask me, the one big concern for the market is, to me, is number one, liquidity, not trade war, not political uncertainty. It's liquidity, sum and total is liquidity. Will people cut the checks, continue the SIPs, continue to buy mutual fund? Will the overseas FIs continue to commit capital to India? If liquidity is good, we are good. If liquidity is not good, our poor fundamental depress it further.
And you know, Ajay, you were making a very interesting point earlier, that it's about how much commitment do you want to take in the market right now. Tactically, is it time to diversify your portfolio? Because things are like getting into that eerie, uneasy zone right now. Do you need to buy more of gold? Do you need to restrict your investment to large caps? What is it, do you think, should be one's strategy right now?
I think two things: restricted to large caps, and if you're looking at mid caps, we have focused ourselves on 2 or 3 areas of mid cap. One is the defense mid caps, because there some orders have started to flow through in the system, and we see going to be substantial traction coming through in this process. And number 2 is, even in the small and medium sector, consumer facing companies is what we're looking at. And number 2 is the mid cap IT space. I think they will fly below the radar and do wonders to their portfolios. So I think in a combination, but your focus has to be large cap. Even if you look at the banking industry, where would you put your money today? Look at what's swirling around in the system. Apart from HDFC Bank, can you actually put a hand on your heart and says you are comfortable with the balance sheet of any bank whatsoever? You can't. And therefore, it's back to the point, you gravitate towards the top. So you have an auto company, you have this company, you have a bank, all go to the top. So you go to HDFC, go to HDFC banks of the world, then you might go to the auto companies of the world, and if you want to ancillary, you can't get better company than Bharat Forge, but that's got the risk of export sitting on that company. So you go down the ladder on two-wheeler companies, go to consumer companies, Bata, Britannias of the world. So the horizon is full of these large cap, low debt companies, with a few exceptions, which are like a Reliance, which is a different play, like an ITC, which is a total phenomenally underpriced stock in our view. We're not recommending it. We don't hold anything. We're waiting for it to see. And we have said repeatedly that the chairmanship changes, we will be buyers in ITC. We are very clear on that path. So, you got these things coming through. Maybe L&T will change around the leadership again and we'll buy L&T. So focus on large caps. There's going to be a lot of action there. A lot of mid caps are going to get sold very cheap in the next 12 to 18 months. Mark my word for that. So therefore, this is the way you plan your investment, and I think sleep peacefully. I think this environment is not going to let you sleep peacefully for a while.
Let's say 6 months ago you were bullish, and now you think, given what's happened to crude, what's happened to currency, what could happen to trade war, it's time to get out. I mean, there's nothing wrong in going wrong, Ajay. I mean, that's what I always tell everyone, that you work with the thesis. If the thesis changes, you got to move on.
Well, the problem is people like us, as investors, we don't move out of the market ever. We reposition. And I think that's the more important one, which I said 2 things. Book your profit and reposition. You may have pockets of losses in a month or so, which will come across in any period of time. But by and large, over a period of time, if you're running with the theme of booking your profits and shifting your portfolios to where the market is, you are fine. You don't need to be out of the market. We will never be out of the market. We'll never sell out 100% ever, because we still believe that any point of time we find companies with tremendous value. As I said today, that every market fall gives an opportunity for a good quality company. Yeah, a technical analyst may tell you that you could have bought that 3 months later. Nothing much may happen from now to 3 months. But that distinguishes people like us from a technical analyst, that we are patient and we can wait it out and we can reap the rewards. So I think follow the principle, book profits, and keep moving a portfolio adjusting to the market. And there is no shame in that, there is no harm in that, I agree with you. And we all will make mistakes. Of course we will make mistakes, other will be gods and sitting in our own islands like Richard Branson does, who makes mistakes and still makes billions.
Yeah. He's a good guy to follow, yes. And I'm sure everyone would love his lifestyle. But Ajay, cheers to that, and we'll chat again soon. Thanks much for taking time out and speaking with us.
Thank you very much. Cheers. Thank you very much.